So you can have a distributed database architecture that's just replicated, but you've still got one version of the truth, and then you have to partition that around rules and roles and who can see what. You don't need to do that anymore. You can use the architecture that DLT provides to have a data structure that only you can see. Right? So it's easier to apply rules to this architecture, and it's more resilient. This architecture is more resilient than, for say, a centralized database or even a replicated database.
That is Justin Amos, and this is episode 33 of the Blockchain Pro podcast. Hello and welcome to episode 33 of the Blockchain Pro podcast. I'm Adriana and today's guest is Justin Amos. Throughout his career, Justin has held a variety of interesting roles in top-tier financial services organizations, working all over the globe, which landed him in Sydney in early 2017. He has recently been hired by Lygon to commercialize a DLT-based bank guarantee. You will hear us joking about take two at the beginning because I don't know why, but the recorder kept failing on me as we tried to record this interview. But hey, we got there in the end. So without further ado, let's get to know Justin. Hi, Justin.
Hello.
Take two.
Should we do this again?
How you going?
Yeah, I'm just pretty same as well 30 seconds ago. Yeah. Very good, thank you. Very good. Very busy, but all good, thank you. Yeah.
So we were talking about how interesting this year has been.
Yes, yeah, challenging year for everybody, right? And
Yeah.
but from a selfish point of view, it's been a good year for me, professionally and personally. Health, fitness, family, all those things are important. I've managed to carve out some time for all of them, and it's been pretty good, thank you.
That is really good to hear because this year has been challenging, I guess, for everybody.
Yeah.
For some people more than others, so I'm really blessed that we can sit here today and talk about that face to face.
Yeah, exactly.
At about a meter distance.
Yeah, well, 1.5 now. Anyway, your spatial awareness is poor.
That's
it's 1.5 meters. It's 1.5 meters.
There's no community transmission in Sydney, so we're good.
Are we? Oh,
Yeah, I guess we are.
All right.
Okay, before we dig into what's happening right now, let's go back in time and talk about how you started your professional life. And I know there's some interesting twists there.
Anecdotes. Yeah, I'll try and be, I'll try and be brief on that. Yeah. So no, I've been working for close to 27 years, I guess, something like that. I'm trying to give my age away, but
What did you do at uni?
economics and economic history.
Okay.
So predominantly the economic side of that. I was always going to do economics at uni from the age of about 12,
Okay.
I think. And I was
How
interested
did
in
you get
commerce.
interested? Okay.
I was just one of those kids that sold sweets at school and things like that, and was always, wheeling and dealing as best you could. So it was one of those things. I was just naturally interested in it, in commerce and theory of money and things like that. So, yeah, and I fancied going into capital markets when I was probably about 15, 16. So it was a path that was trodden. It was a well-trodden path that I thought I should go down as well. And yeah, it was good.
But
it was fun.
First job out of uni had nothing to do with economics.
Well, it kind of was. If you talk, I had a 6 months selling cars. If that's what you're referring to.
No, I'm referring to the soccer.
Oh, playing footy.
Yeah.
Well, no, that was semi-professional. I'd like to be able to say I was good enough to be a full-time football player, but it was a semi-professional. Yeah, but I think what you're leaning into there was the fact: how did I get my job at JP Morgan?
Yep.
Yeah. Well, I'd like to claim it was academia and personality, but the hiring manager was actually the gentleman who was the JP Morgan Football Club's manager, and he looked at my CV and the fact that I played semi-professional in the first team at uni, and said, can I come and play for him, for JP Morgan? I said, well, give me a job and we'll start there. So we started there, and very shortly thereafter, we had 2 good seasons. We won the bank leagues twice.
And, there you go. I didn't even know there was a bank league.
Yeah. Financial Services League it was.
Yeah.
And so banks and insurers. Yeah, pretty good standard in London.
Yeah.
And did that for a couple of years, and then moved over to New York on the 60 Wall Street office. Was there for 5 years, doing many things around emerging market derivatives, bond index swaps. Sat next to Blythe when she invented credit derivatives. That's a circular comment. We can come back to that later. And then just had a good career. Tokyo 2 years, back to London for 7. Building out electronic trading platforms and things like that. So really getting into the technology side of the world. And then left JP Morgan and the safety of that nest to set up a startup using algo trading technology for market surveillance. That was a very interesting 5-year journey. We successfully exited and then did a 2-year earnout. And then I got a call from Blythe Masters again to see if I wanted to join Digital Asset, because they were just establishing themselves, making their first hires. And that's how I came to Australia. So I was APAC lead for DA with the ASX for a year.
That must have been an interesting time.
Yeah, it was chaos. It was great. There was such a fast-moving environment at the time. You know it. You were involved in it, and what we were doing there and getting the message out. We were always on aeroplanes, always at some forum somewhere talking about what we were doing and what the world was doing around blockchain and DLT, and promoting what the ASX was doing and trying to build that capability up. So it was a good year. But I got an opportunity to move to work with some great guys at PwC in building their blockchain practice up and starting building technologies around distributed ledgers and using a collection of startups to work with us on putting like different pilots and proof of concepts together. And it was that variety in the movement into crypto that was really appealing in that role, and did that for 3 years.
When did you start with PwC?
January 2017.
Okay, so it was like almost at the peak of the last bull market.
Yeah,
Things were going a bit crazy.
Yeah, exactly. And that's when the ICO market was just going bonkers. Not something necessarily that we could get too involved in at PwC because of the nature of it. But we did do an awful lot of advisory work around the edges and things like that. So no, that was a great 3 years. Worked with so many great companies, did lots of great reviews, right from new public networks to the private ledgers. Built great product. It was really good, and we worked with some great people. Yeah, really enjoyed that. Learned a lot.
And what's happening now?
Yeah, right. So.
I know you have exciting news.
Yeah, the exciting news, and that's why this is quite timely, is on November the 2nd of this year, 2020, I took on a role as the CEO of an entity called Lygon. The actual name is Lygon 1B, but it'll be trading as Lygon. And what Lygon is the product or output of 3 years of hard labor and graft from 3 banks, a landlord and a technology services provider. The banks are CBA, ANZ and Westpac, and then we've got Centre Group and IBM. And the IBM's blockchain platform and the Hyperledger Fabric component architecture as well in the middle of that. And what has been designed and built and it will soon to be launched publicly is a piece of financial market infrastructure.
Which does?
Which digitizes financial assets. And the first financial asset that's going to be put on this network is a bank guarantee.
All right.
Right. So very exciting time. This has been a big piece of work, a lot of effort from the participants in the market to define and design. Then from the partnering banks, Centre Group and IBM, to work through the real hard yards in creating a digital framework and a standard from banks to the marketplace on what a digital certificate needs to be in the bank guarantee space. And Mallesons have been at the middle front end of this right the way through. And it's been a very challenging journey for everybody to get all of the paperwork in place and the definitions in place and signed up to and subscribed to be able to make this work.
For the people who are new to financial markets, what is a bank guarantee? And why is it important to digitize it?
Yeah, okay, that's a good question there. All right, so a bank guarantee it is part of the banking world, right? It's more commonly known outside of financial services because a retailer, for example, knows what a bank guarantee is, right? A beneficiary is a landlord. They know what a bank guarantee is, and obviously then you've got an issuer, and an issuer has predominantly nearly always been banks. It's not always the case anymore because insurers are in that space as well now.
Okay.
So they're the participants in a bank guarantee issuance process. And why is it important to change this? It's the latency or friction in the process from an applicant to beneficiary to a bank, back to the beneficiary to the applicant, is the single biggest pain point in most landlords and retailers' journey in actually getting those businesses to market. If you speak to any centre owner, for example, and this is just one example, right? If you speak to a centre owner and ask them the question, what's the one thing you can change? The answer is always about the bank guarantee process. It's their biggest point of risk because they've got a retailer that wants to get the keys to the space to start fitting out so they can start on their journey. The landlord wants to give them the keys so they can start, right? But they have to wait until there's a certain amount of assurances in place. And these assurances take a long time to pull together because right now they're made of paper. They rely on the post. They get lost in the post. They cannot be amended. They get eaten by someone's dog. Right? They're a bearer certificate effectively. Right? So the paper process, which has been around for 500 years, isn't necessarily fit for purpose in this in the commercial environment we're in now. So when asked by the banks, when they asked their customer base, what can we do for you? They said, change the bank guarantee process. Right? And that's where this journey started.
And now it's changed from how many days to how many days?
Well, we'd like to say we can do it in a day. It doesn't take very much time at all to issue a digital certificate, but you still have the KYC and the AML and those all of the checkpoints and due diligence points still take time. But at least you have this recorded in one place and certified and ledgerized. All right, in a digital form. So that's that's one of the significant changes to the timeline. It's all in one place. And you can approve it, the workflow will give it to me, I can approve it, and the workflow will go to the next person, they can approve it. And that's just the issuance part of it. One of the greatest risks in the paper bank guarantee process is nobody gets to amend them because it's too hard. It's not worth the effort almost.
Okay.
So if you have a bank guarantee that's for a landlord, for example, that's a percentage of the rental price, well, that rental price is going up every year. The bank guarantee doesn't change, right? So the risk profile of everybody's kind of out of sync to where they would want it to be because it's just too difficult to amend these things. And when asked if you could amend it, would you? The answer is absolutely we would. How many times a year? 2 or 3 times.
Oh, wow.
That's kind of how out of sync the guarantee is to the business owner on where they'd want that guarantee to be. Right. So everybody we speak to are open arms saying, will you hurry up? We want to get on your platform. So we feel like we're going to make a big difference, which is great.
That's exciting.
Yeah.
And is Lygon a blockchain?
The blockchain?
Is it a DLT?
It is.
Let's talk about the difference of the two.
Yeah, it's in my let's just say, informed view, I would say it is a DLT. I probably wouldn't call it out as being a traditional blockchain, as you would describe the Bitcoin network or the Ethereum network, et cetera, with it being a private ledger, the need for consensus isn't as strong, and therefore there is no need to mine blocks. Okay, you've got distributed databases, privacy protocols, etc., and all the other component architecture that you have that gets provided by the IBM's blockchain platform, IBP. But I would say that you don't have the proof of work consensus requirement, and you don't have a block. You have distributed databases. That's how I would describe it. Right? But we're on IBM's blockchain platform, so if people want to split hairs on it, they can go and speak to IBM.
No, I don't think people will want to split hairs. What I'm getting to this is a lot of people who are critical of distributed ledger technology says that databases are databases. So why would you not just have databases? What is the advantage of a DLT over a traditional database?
A centralized database, I think, is what you're trying to ask the question about. So why is one better than the other?
Yeah.
There's plenty of reasons why you'd want to have a centralized database, and you can also have a version that's not necessarily centralized but replicated. So you can have a distributed database architecture that's just replicated, but you've still got one version of the truth, and then you have to partition that around rules and roles and who can see what. You don't need to do that anymore. You can use the architecture that DLT provides to have a data structure that only you can see. Right? So it's easier to apply rules to this architecture, and it's more resilient. This architecture is more resilient than, for say, a centralized database or even a replicated database on the same data, if you know what I mean. So having a distributed data model with the data available just to those who have permission to see that data is pretty critical when you're trying to operate as a market operator with multiple participants on it using sensitive data.
So that means only the entity who's allowed to see that little bit of data can see it, but everybody that's on that infrastructure is playing by the exact same rules.
Yeah, now we have a series of participant rules that people have to subscribe to and sign up to when they join, when they're onboarded, and those rules define how they are supposed to operate on the platform and what protocols they're supposed to follow. So we obviously have to have that in place. I mean, naturally, a workflow will coalesce between the participants and how they want to do it. We're not going to say you have to do it within a certain time frame, stuff like that. But the actual rules and the role definitions of people on the network are pretty clear and distinct. Yeah.
That's pretty cool. So you're excited about this?
I'm so excited. It's when you first start a new role, you're generally excited, and then you kind of go down the curve a little bit into the valley of despair. Like, how can we possibly do this? And then you start putting key hires in place to sort of like take the load off your shoulders and go like, yeah, okay, you're good at that, you're good at that, you're good at that. This is everything that we need to do to be able to launch as a market operator. And then when you kind of like take a step back after your first month and you realize the growth of the team already, and the feedback from the market and the readiness of the market and the clients to do this, we're going to be launching a piece of financial markets infrastructure in the next quarter, in Australian Q3. I always want to call it Q1, right? And it's going to be around for an awful long time. It's really exciting. It's going to make a big difference to people. And this is just the first cab off the rank. The way it's been designed is on a template form. So we're talking about bank guarantees. Here's a digital bank guarantee. Well, okay, what's the next one that comes out? I mean, the difference between a bank guarantee and a letter of credit is, from a digital perspective, is nominal. From a legal framework, that's a different conversation. But to be able to put the next digital guarantee on there, or the next digital bond, or an insurance bond, is not a big uplift for us at all. So we'll just be thinking that through and pivoting where our customers, we have a product council for our early adopters who are gathering to talk about what does the roadmap look like for 2021. And so I'm really excited and enthused by the engagement by people already onto what they want next. So yeah, it is very exciting. Now it's achievable. It's taken me about 3 or 4 weeks to feel comfortable. And we've got a great partner in IBM, right? So whatever needs lifting, they can do the heavy lifting, right, to get stuff out the door. The platform resiliency and uptime is mission critical to what we're doing. IBM have been in financial market infrastructure for a lot longer than I've been on this planet, right? And that's a great partner for us to ensure that as a market operator, we can provide what the market needs.
Let's switch gears a bit. What kind of resources would you recommend for people who want to learn more about blockchain or who want to understand more about blockchain, financial markets, and DLT and that intersection?
Yeah, all right. So, which kind of resources people should be kind of like reaching out for or trying to find? It generally depends on what they want to do. If it's technical, it's one. If it's business, if it's trending, it's 2, it's 3. But I personally think that the digital channels can just kind of give you kind of the tidbits, the interesting sound bites, but often there's links to white papers and write-ups. I mean, like we said earlier on in this interview, I've got an economics background, so I'm very interested in the economics of where the markets are moving with respect to new technologies. Part of my role at PwC was head of emerging tech, right? So it's not just blockchain. And so, read Medium. It's often a balanced viewpoint as well. I try and avoid bias, so I don't necessarily read too much into what CoinDesk are reporting and things like that around the crypto side. I just can't take it on face value anymore. With all due respect to Coinbase, right? I just don't read that kind of those materials. But then for me, you gotta just work in the environment. Your forums and the meetups and things like that are generally great for meeting people that can give you the opportunity to go and do something. I mean, more often than not, it's a pitch. All right. So pitches are generally biased. So you got to take some of those with a pinch of salt. But you're definitely going to meet people there, and you might meet people that you want to work with. Try and find, if you're new into space, try and find somebody that might be able to mentor you. Whether they know they're mentoring you or not, it's a different thing. But people that you can learn from, and that can give you a steer as to what you might want to be looking at if you can define what you want to do. There's plenty of people who've been in this space for half a decade and more. And I find that nearly everybody in our space is more than happy to find time to help steer and guide people. So that probably is a good piece of advice.
I agree. I'm going to ask you a final question, which is, as an economist, what do you think about Bitcoin?
As an economist, not as a technologist, right? So purely from a markets perspective.
Yeah.
Well, I've given up trying to find correlation as to, say, the news and why Bitcoin does what it does. You can look to the futures markets, for example, and look for expiries on futures markets and trying to work out what might happen. It was pretty obvious that rolling into Thanksgiving after a bull run, that it was probably going to soften. Right? I thought that was very obvious that was going to happen. I wasn't so sure it was going to happen quite so severely. It's in such a short period of time, that correction was pretty severe. But do I believe and buy into the narrative that technical analysis would say that Bitcoin's going to be worth over $100,000 by the end of 2021? No, I do not believe in technical analysis of Bitcoin. Slow growth over time due to utility. That's probably a better way of looking at it from an economist's perspective. Where it's being picked up and being used and being held by everybody because they've got it in their wallet as a transactional currency or a transactional token of value. Don't want to get called out and calling it a currency necessarily. So, is a better gauge to the long-term value of something. I'm concerned for Bitcoin in the sense for the upcoming central bank digital currency wave and what that might mean to the globalization of Bitcoin as a token of value for transactional purposes, because one of its values to me as a consumer is to be able to use it seamlessly. But if I can use an Aussie dollar equivalent, then that's linked to my bank account, I might use that instead.
How about Bitcoin as an alternative to central bank currencies, digital or otherwise?
Well, it's happening. Probably a lot slower than everybody hoped. But its use, its utility in that space may get compromised by central bank digital currencies coming out, because people can use that instead. Whether you want to use it because of your confidence in its value outweighs a confidence in the value of your domestic currency, well, you're buying things in domestic currency anyway, you're getting paid in domestic currency, the PPP, everything's in domestic currency. So I don't personally look at it through that lens as am I going to use Bitcoin to buy this coffee, I'm going to use Aussie dollars to buy this coffee. You know what I mean? It's like, we should be interchangeable. I do like the new card that came out though. I can't remember the supplier, it's like Vector or something like that. There's a new Bitcoin credit card that came out. Really cool green card. Saw it the other week.
I haven't seen that.
Yeah. So basically, you can just basically load it up. Pretty seamless user experience, and then just go around. I think every Visa terminal covers it.
Oh, there you go.
Yeah. It's quite nice. So you wouldn't know I don't really think you'd necessarily know the difference. The vendor wouldn't know that you're necessarily paying with Bitcoin.
You're just paying with
but
Visa.
You just pretty much. Yeah. So that's I like that. That's a good user experience. So,
user experience, it's all it's about.
Yeah, pretty much. I mean, I don't know what my Bitcoin position is. I don't know what it's worth. I don't know what it's worth now. I haven't looked at it for the last hour or so. No, it's one of the first. My crypto wallet's the first thing I look at when I wake up in the morning, which probably doesn't make my wife feel too clever. But so I'm still pretty much in the crypto space too. So.
That's good to hear.
Yeah.
All right. Any final words? The floor is yours.
Yeah, just look out for Lygon, everybody. We're going to hopefully have a big launch in the next quarter, so February or March, hopefully February, and then we'll be digitizing bank guarantees and being, I think, the first national financial markets infrastructure operator using distributed technologies, or blockchain, if you want to call it that. I think we're going to be the first out. You'll have to call me on that.
Awesome. So watch out for those job opportunities, peeps. There'll be plenty.
We're hiring.
All right.
Oh, that's entrapment. Do you want a job?
Thank you, Justin. Thank you so much for bearing with me while we had these technical difficulties recording this today.
Consumer electronics, terrible.
All right, thanks.
All right, thank you very much. Cheers.
And that was the awesome Justin Amos. To connect with Justin, follow the links in the description. Make sure to let him know you heard his story and send him questions. Talk to him about Lygon, just get in touch. Remember to follow the podcast on Twitter at blockchainpro_, and subscribe on YouTube. Just search for Blockchain Pro channel. You can send guest requests and comments directly to me via our website, blockchainpropodcast.com. You know, I love getting feedback, so don't be shy. That's all from me today. Hope you enjoyed this episode. I will see you at the next block. Bye.